So we continue our series of Meet the Manager videos today as we're joined by James Donald at Lazard. He's the lead portfolio manager of the Lazard Emerging Markets Fund, and he's run that fund since it's launched in 1997. James, thanks very much for joining us today. I wondered if, just to kick off, you could maybe just describe the approach that Lazard takes to emerging markets and what the investment objective of the fund is.
Yes, I mean, Lazard does run quite a lot of strategies in emerging markets and several equity strategies. But this strategy, the emerging market equity strategy, is a relative value approach. It is interested only in the stocks of companies that have stable profitability and relatively high profitability over time in relation to its valuation. So I would describe it as a relatively conservative strategy.
Can we go into a bit more detail about that relative value and looking for companies that are financially productive but attractively valued? How does that work in practice, and what do you look for?
Well, we define profitable by the term return on equity. So we want to know how much in profits companies are generating from the capital they're using. Often this is a means of companies actually rationing capital for certain different levels of return. And so it's often not growth related. Often companies that are growth related tend to be spending money very, very rapidly, and they need to have balance sheets with lots and lots of cash on them to spend that money. This is one where companies are much more careful about spending money, and they really need to get a certain return for what they're spending, or they won't do it.
There's a lot of internal factors impacting emerging markets at the moment. There's a host of elections last year, tensions in Russia and the Ukraine, as well as a lot of external factors, things like the divergence of monetary policy between the US and Europe, commodity prices, the oil price falling quite substantially. What's your outlook for the emerging markets, and how does that lead on to the construction of the portfolio?
In the last 2 years, emerging markets have actually underperformed developed markets, and particularly the US market, by very, very large amounts. And this is a relatively unusual way that it's done it, with the developed markets and again, particularly the US, going upwards, whereas emerging markets have essentially gone sideways over this period. And I think a lot of people are confused about this because historically emerging markets have typically underperformed when there have been crises and markets have gone down. But this time it has been very, very different from that perspective. I think there are a number of reasons from this that have caused it, and I think commodities being weak is certainly one area, although a certain commodity price weakness actually economically benefits the emerging markets, in particular the oil price fall. It helps most emerging economies rather than hurts it. But I think you've had a situation where the US has recovered. Things that were better than expected occurred in both Europe and Japan. And at the same time, there have been some worries about what have been going on in the emerging markets. In particular, worries about the misallocation of credit in China, and again, the direction of commodity prices as the economy of China has been slowing. And those have had major, major negative effects on emerging markets.
In your commentary, you often give short, medium and long-term outlook for the emerging markets. What is that currently?
We are actually bullish, short, medium and long term. We have substantial upsides across our portfolios to what we think are appropriate valuations based upon not fantastic assumptions. Really, I think given the expected levels of profitability, we do not think the valuations in today's markets are extremely high.
Maybe to finish up, if I could maybe ask you to pick maybe a a particular stock or maybe a country allocation or a sector allocation that is maybe a notable overweight in your portfolio?
Well, it's been a very interesting time the last few years because we've seen a lot of investors invest in emerging markets in companies that we have typically liked. But that has caused valuations to rise. A lot of consumer companies, very, very good businesses with very high profitability. Internet-related technology has done extremely well. And this has had the effect, because we're so valuation sensitive, of pushing us out of some of these high-quality companies. And as a result of that, I would say we have been attracted to more economy-sensitive names in the emerging markets that are on much, much lower valuations. This is by no means a wholesale move. We still find attractive opportunities in consumer sectors, in technology, which is a big weight for us. It's just that the valuations have forced us into other areas. So we have built up positions in energy. There are some interesting valuations in the material sector, in the industrial sector as well. So as of today, it's a very balanced portfolio with substantial holdings in almost all sectors.
James Donald, thanks very much for joining us today. If you'd like any more details on the Lazard Emerging Markets Fund, please contact your Killick broker for a copy of our research notes. Thanks very much.